Good morning from LMAX Exchange. It is Friday the 21st of November, the day after another bank has been fined for abusive market practices. Barclays were fined yesterday for misuse of last look. It's not about that individual bank, it's about just another part of the erosion of trust in the FX markets. This isn't good for the industry. There is another way. There is another way without this practice of last look. I'd like to speak up for the banks and the non-banks, in that 25 banks provide firm liquidity, no last look liquidity, on LMAX Exchange today. And the same with 9 of the world's largest non-banks. They trade without this one-way optionality that's last look. It's our opinion, it's our long-held opinion, that this practice should not be available on a multi-dealer platform. On an anonymous multi-dealer platform, liquidity providers should not have that optionality. And mainly because it's open to abuse. And again, it erodes trust in the marketplace. I've no doubt that there's a lot of liquidity providers who do not abuse it. And in fact, in this instance, it looks like there's individuals abusing it and they should be sanctioned. But let's take away that vagary. Let's take away that ability to misuse this optionality. We think the marketplace should trade without last look. Don't get me wrong, I differentiate multi-dealer platforms from single-dealer platforms. If a customer has a bilateral relationship with a bank or a non-bank, and they have certain rules of execution and certain tolerance levels that may or may not include last look, that's entirely fine. It's disclosed and it's a bilateral relationship. But the anonymous use of last look and multi-dealer platforms surely shouldn't exist in 2015. One of the unfortunate byproducts of last look is the evaporation of liquidity. You saw it happen on January 15th with the S&B. Because actually what people talk about as liquidity in the FX marketplace is not liquidity at all. It's indicative pricing that is revended throughout the marketplace. Hence why it can disappear so quickly. Real liquidity is firm limit order liquidity on venues such as the LMAX Exchange. So again, I urge the working groups, the BIS FX working group, the FEMA bodies such as the FMSB, to act now. This practice does not exist in any other asset class. And it shouldn't exist in FX. It will not exist 5 years or 10 years from now. So let's not talk about standardizing a practice that is so open to abuse. Let's just end it now. Let's abolish it now. Again, I come back to my earlier point. All the world's largest banks and largest non-banks have proved that they can trade efficiently and effectively without this practice. They've been trading on LMAX Exchange for over 4 years. Thanks.